All right. Oh my goodness, we're live. Both my partners have abandoned me today on our current episode. And so we're going to just dive right in with our guest and we're going to have a really great conversation. So welcome to How to Founder. We are talking today about something that CEOs and founders usually don't want to talk about and avoid, but really, like, what if your most profitable month is actually your most dangerous month? Like, we're going to dive into some conversations around money that I think is going to be really helpful and change your perspective. In 2015, Crumb's Bake Shop reported record revenue while simultaneously filing for bankruptcy. A 30-location cupcake chain, which I'm sure my daughter would like to be in, profitable on paper, couldn't cover its next lease payment. The P&L lied and the bank account didn't. Today on How to Founder, we're going to be talking about cash flow management, profitability. I'm your host, Stephanie Hayes, and with me today is our guest, Colin Sanburg. He is the founder of FinElevate and a serial entrepreneur who has spent 2 decades building, buying, and turning around businesses. He's applied over 450 financial strategies to help founders escape the gap between profitable and solvent. Making up new words today. Welcome to How to Founder. So happy to have you here, Colin.
Yeah, thanks for having me, Stephanie. Excited to be here, and hopefully won't scare anyone away. We'll make it less painful to talk about finance than that might sound on the surface.
It is my life's mission to make sure that CEOs and founders are talking about money and talking about finance. So I think we're going to be in good company, at least with each other today. So you've seen the inside of multiple turnarounds and probably multiple other scenarios as well. So when a founder comes to you celebrating profitability while their bank account tells a different story, what's usually the first thing that they've missed?
Yeah, there's 3, I call them the 3 cash monsters that can come get you. And typically for businesses, it comes down to, how fast you're collecting money, right? So if you're, recording revenue based on when you did the work and saying, we made money, but no one's paid you yet, that isn't really the right way to go about it, right? And so it's how fast you get paid, how fast you pay your bills, your vendors, and obviously you've got to make payroll and that kind of expenses. And then the last one, it depends on the business, but for businesses that have inventory, inventory can be an absolute killer. I've experienced all of these myself. I like to say I made every mistake myself so that I would know from firsthand experience what it feels like, for the founders that we help. But yeah, those are usually the 3 big ones.
Yeah. And like that varies wildly based on what type of business that you have, for sure. And so, I guess it would be a little bit difficult to talk about kind of churn time, like standardized churn times, if you're running a services business where you get paid up front, or if you're running a product development business. So what are some of the things that you want to be watching for, regardless of what, your profile looks like in terms of your industry and your business model?
Yeah, if you don't mind, let me go back actually too, because there's a 4th one that we didn't talk about. And that may have been the story with the cupcake shop. The last one are debt payments, or right, if you're servicing loans or you've got big capital expenditures. So you're basically outside of the day-to-day operations of your business, you're making these big commitments to kind of fuel the next wave of growth or the next round of new stores or what have you. In those situations, those things don't show up on your P&L. And so to your point, I'll see a business owner who's like, look, I've never made more money. And then they wonder why there's nothing in the bank. And you look and they've got a whole fleet of new equipment they bought. And I'm like, well, where do you think we got all that stuff? So that one is definitely a common disconnect that people don't really see for what it is.
I know a lot of founders feel like they're in the dark, right? When it comes to financials, they get resistant to even having the financial conversation, because I think that the literacy is not there. Like they don't, and they're not being given tools that, a an accountant, bless their heart, is going to give them P&L, and they're going to give them balance sheets, and they're going to give them income statements. But there's very little focus on cash flow, right?
Yep.
And I think that that's the big piece that's missing for them, because that's what a founder thinks in, right? Accounting reports is, they're good for standardized understandings of valuation and what have you. But how does a founder become more conversant in the actual cash flow of their business and able to make better decisions?
Yeah, that's a great question. I think it's definitely an area that you have to be honest with yourself. You have to work at. Like, I'm always telling people there's no magic, pill. There's no easy button when it comes to finance. Like, the reality is, to be a pro at what we're all trying to do, which is running businesses. If you look at, if you were to look up at the people that we all admire that are maybe, we know running really successful businesses, or maybe they're making it look easy. And that's a different definition for everyone. But whoever those people are, I guarantee you, if you look up to them and admire them, they understand their numbers. I guarantee you 100 out of 100. So
100%.
Yeah. So I think it's a very common early to mid stage entrepreneur story to kind of want to tell yourself you can get away without ever really figuring this stuff out. Like, I can somehow get away with not being that knowledgeable. Well, of course I'm going to know my product. Of course I'm going to be able to sell. Those are like critical skills. But we start to tell ourselves that somehow we can exist or even succeed while not really understanding the financial side of our business. And that's not real. So going back to your question of connecting, profit into cash, or the P&L into the cash flow, it really starts with telling yourself you're going to have to buckle down and learn. Like, there is no magic tool that will just make it like all the light bulbs go off and all of a sudden it makes sense. Yes, we want to do things to make it more obvious, more in front of you. I mean, that's a lot of what we work on with clients. But it really starts with education. It starts with being willing to learn and knowing that I may hate math, but I like having a successful business. So it's time for me to go figure this out. Right.
But it's not even math, is it? Right? Like, I think that the biggest gap is that they don't know what's available to them, and they don't know what they need. And so they think, well, I've got a bookkeeper, or I've got an accountant, and they make my financials, so I must be doing the right thing. But actually, the financial, as we talked about, financial statements are not really that indicative of the operations of the business, right? And they're always looking in the past.
Yeah.
So, I would always advocate for, what a founder really wants. They want to be able to do some modeling. They want to be able to go and say, if I make this strategic decision right now, we're going to invest in some new equipment. How does that actually impact our cash flow over the next 6, 12, 24, 36 months? Like, what is that actually going to mean for the business? Am I going to be in a position where I have a shortfall? Am I going to be in a position where I have to go and maybe that's okay if I know it's coming, because I can make other decisions going up to that. So I feel like that's more what they need. And when I have finished conversations with my CEOs, what they want to see is, if we choose to hire this person right now, or if we choose to, make some other investment or claw back something, a product, what's that actually going to mean to my cash flow? And, we set up tools for them to do that. But what do they need to be asking for? And what do they need to become educated in? It's not reading financial statements, is it?
No. But again, I think I just see this like force field of hesitation sometimes with entrepreneurs when they see numbers, right? They might say, hey, I this is just not my cup of tea. But I think, to your point, they all have questions. They all want answers. They all want support in trying to make decisions, because, that's just the nature of running a business. You make a lot of decisions. I think, to your point, one of the things I always push is, most entrepreneurs, the first time we work with someone on finances, they will tell you that it's impossible to forecast. They'll tell you that it's impossible to look forward. You can only look backward. And then they say, well, but I don't get my numbers very quickly, so the bookkeeping is outdated, or I don't really know what this bucket is here. And so they just kind of dismiss the whole thing. The really, really good businesses don't just live looking backward. They've built something to help them look forward. And I always say forecasting is like throwing darts, right? The first time, I just want you to hit the wall. I don't even care if you hit the board. It's like, much less do we expect a bullseye. But people will say, because I don't know how to hit the bullseye, I'm just not going to throw the dart. Like, well, no, it's impossible in my industry. You don't understand my industry. There's no way to predict what revenue is going to be 2 months from now. And I'm like, well, that's interesting, because if you look at publicly traded companies, every single one of them across sprawling enterprises with sometimes thousands of divisions make forecasts into what they expect to happen with not only revenue, but profitability going forward. And nobody was born with that skill. Everyone has to learn it. So we might as well start working on it.
But there's a whole other side to forecasting, which is not throwing a dart at the wall, but it's actually building intention and strategy, right? So by creating my forecast, I'm actually giving myself a lot more information in the decisions that I have to make. And I know what I'm working, like there is such a difference between a founder that just says, well, I'm going to reach a $10 million, revenue number for next quarter, versus, a founder that says, I'm going to reach 10 million by selling, $5 million contracts plus, 12, I'm totally, the numbers are wrong here, but like 12, $500,000 contracts and, some of these little things over here. I have the mix. And what happens is when I start with my numbers, I know how I'm going to make that money. And therefore that, the marketing and sales strategy for selling $5 million contracts is a very different strategy than selling $1 million $5 contracts. I totally don't know if I have the right numbers there, but you get my point. So I think that the numbers, getting comfortable with the numbers from a forecasting and a modeling perspective is so, so critically important. They don't need to become experts in looking at financial statements and, the retroactive stuff. You've got lots of people who can, and sometimes they're kind of fiction anyway. They don't really give a true representation of what's happened in the business. And so how does a founder become more comfortable and educated? Do they hire somebody to help them? Do they take some classes? Like what's that path from a founder who really just, and I'll tell you, I have a lot of creative founders who are like, I don't do numbers. I'm like, we don't do numbers and math. It's more like this shows us a pathway, right? So what's the best strategy for someone who's just like, I don't know anything right now, but I want to?
Yeah, I think it depends on their style, right? If you are, one of the things I'm always an advocate for is like mastermind groups and peer groups. I think if you surround yourself with other people on a similar journey, that is one thing, because you need other people you can talk with and relate to. I think that a lot of times it's working with an expert. Like, we both work with clients. I think having kind of a tour guide, right? If you want to get somewhere, really understand what's going on, and you want to have an interactive Q&A with somebody who actually understands your business and not just look up textbook answers for things, then you probably need an expert involved in your business. And I think, we help a lot of founders who get to the point where they're just sick and tired of living out of looking at their bank account and assuming that that's the only answer they can ever really understand. So when they get beyond that and they say, I'm making decisions, my bank account doesn't tell me what I'm going to have 2 months from now. It only tells me what I have today. I need more help to make these decisions. Then that's usually when we get involved and start working with people.
It seems to me, and maybe I'm creating a new project for myself, but it seems to me like there's an opportunity for like a founder focused numbers tool that is not a big crazy spreadsheet, but it allows them to model, what actually happens to their operations and their operational capital once they make certain decisions. Like, I don't know if that exists out there. I haven't seen it yet. I make spreadsheets, but I know there's a real gap between what my founders want to actually look at and what I know that they need, right?
Yeah. And I'll tell you, we have a couple solutions for that when we work with clients. Number one, I use what I've called the simple profit formula, which is a 5-line P&L. So we cannot live in a 3-page P&L. People start looking through it before they can ever make it to the end. They're like, what the heck is that one little number? And it could be nothing. It could be $29, but they're hung up on it. It's in a category they don't understand. Like, their whole mind is gone. So we roll all of that up into 5 lines. It is just as simple as revenue minus cost of goods, minus sales and marketing, minus labor, minus overhead. And the answer is either profit or loss. I like to look at it in both dollars and percentages, because you have to look at this in a percentage standpoint. Then that normalizes it even as you grow, or over time, that normalizes it as what is a percentage you've been spending on labor, not just dollar amount. Because you see the dollar amount, you get hung up. You're like, well, was that before or after Steve left? I don't know. Let me think. We're asking all the wrong questions. So when we look at it as a percentage, it is just kind of the model, the business model, effectively, for your business. And so that's what I really advocate. That gets founders out of, like, my job there is we can't look for a needle in a giant haystack. I've got to at least divide into 5 haystacks. Now we know we're not looking for a needle in 4 out of 5, because those ones are fine. This one right here, we're going to dig into and we're going to figure it out. And that seems to really help people, get more clarity on looking after what's actually important.
Well, Steve was a major liability, so it was probably a good thing for him to exit the business.
That's right.
So there's something about understanding the founder's perspective on money and what is actually important to them, and the things that they think about and how they understand the business, and tying it back to a business model. I want to shift just a little bit, and I know we were talking about this previously before we went live. Also, one of the things on a founder's mind is, what do I do with this thing, and how does it become like an asset for me in the long term? And we talked about valuation. We talked about understanding valuation. This is my world too. You and I can commiserate on this.
Mm-hmm.
So tell me a little bit about how exits and valuation sort of fit into a founder's perspective, and what they should be thinking about even early in the game. Like, if you're at the point where you're like, I need to sell my business right now, I'm not the person to really work with you. But I think my perspective is that people who are looking ahead at what they want in terms of this asset and what it's going to do for them and their long-term wealth, they've got a lot of decisions to make 5 years before they even get there. So tell me a little bit about what a founder needs to be conversant in, and why they should start thinking about valuation much earlier in the game.
Yeah, I think, the best way I've ever heard it put is the best business to sell is also the best business to own, right? So you have very similar goals in that early stage, which is to set up a professionally well-run business that has independence from the founder, right? Because I can't pay you for something that's just you incorporated. So it has customers, the operations, the whole thing has to have some measure of independence from you. And then at the same time, it's really the best way I've heard it described about getting maximum value is that someone's going to pay for that kind of their trophy hunting, basically, right? The thing that's going to look really impressive up on someone's wall is what people are going to pay the most money for. What does that mean? It means that you have to be best in class at something. You're never going to get top dollar for your business because it's just the average of all averages, right? It doesn't mean you can't sell it for something. But most people are not working this long and hard and toiling away and missing, some of their life in ways that they wish they didn't have to, and making those sacrifices to get a low valuation. That's not the goal. So if you want to be best in class, you want to run a professional business, it means you have to have a professional approach to all these areas we're talking about, including finance. You have to have strategy. You have to have a team that's engaged. Like, there's a lot of pieces you have to have in place. And I always say, like, if you look great from the outside, but the minute I looked under the hood, it's just absolute chaos. Maybe it's your legal documents aren't in order. Your books don't really make sense. Like, if I start seeing those kind of gaps, doesn't matter what the big front, shiny, high growth, that's going to be a red flag most people are going to run screaming away from.
Yeah. I mean, my philosophy has always been like, if you're going to build a business strategy, why don't you build it to support the increase in your valuation as a business, right? And we can everybody seems to be only focused on revenue. Then of course that's going to improve your valuation. But when you do a valuation today, it's going to reveal all sorts of places where that business could be considered a lot more valuable. Operational stuff is huge. Assets you've created inside the business, there's like 100 different pieces that are part of the risk evaluation inside of a valuation exercise. And the converse of that is, like, the places that I have risk are the places that I can remedy the drop in my valuation, right? Because no buyer is going to go and just do like, a cash flow analysis and say, oh yeah, that's the value of the company. No, they're going to dig into a whole lot more than that. So all those sort of qualitative pieces that affect your valuation are the places where you can improve your strategy. And some of those things are going to be things you don't want to do. That's fine, right?
Yeah.
But why not build your growth strategy based on valuation?
Yes. No, I agree 100%. I think most people have no idea what their valuation would be, and therefore they're just kind of flying blind on actually improving it. So yeah, I think it makes all the sense in the world to combine those as part of the strategic, which is, again, I'm not a huge fan of big business. I've worked in small business my whole life. I love small business. I love entrepreneurs. But I think sometimes we throw the baby out with the bathwater. The reality is big businesses do exactly what you're describing. Just like big businesses forecast, big businesses build valuation drivers into their strategy. That is part of what they're not just blindly trying to grab market share. They're really trying to create sustainable moats where they've got economic advantage of some kind that they can continue to make money on. And then if that's proven, to the extent that's been able to be proven, they can sell it. And they can sell for a lot of money.
The interesting thing about small business, and I'm the same way, like I've done a lot of consulting into big business, but I primarily work with small businesses. And the sort of the other narrative around the valuation in small business is that there's still a real attachment to the founder and what they want the business to represent from a values perspective. So that gets really interesting because we're not talking about some cold, faceless financial growth strategy. We're actually talking about a financial growth strategy and a business that continues to deliver from a values perspective and also from a vision and a mission perspective. So that gets really interesting and kind of fun, to be honest with you.
Yeah.
So when we talk about turnarounds, I mean, that's something that I think a lot of our audience would be really interested in as well, because, it's like a really good chance that you're going to be a founder who needs to execute a turnaround. So who's doing well in turnarounds and who's having a really hard time with them? Like what do I need to do as a founder right now to ensure that if and when I get to the point where I need to orchestrate a turnaround, I'm in a really good position to do so?
Yeah, I think that's a great question. My first company was a turnaround. It was all I knew at the time. I found myself very young. I was in my early 20s, looking after the financial side of a business. Very quickly figured out this business is in really bad shape. I didn't know anything yet, but I knew it wasn't good. And as I went down that journey, and it took a long time to make that turnaround happen, there were some major structural issues with that business market they were going after, not to mention all the financial turmoil and issues. But what I learned in that process is that the number one thing that I had going for me is I was really brutally honest about what was happening. I was brutally honest about what the company was good at, what we weren't, who we had on the team, who we didn't have on the team, what my shortcomings were. And so I think the gap where people are kind of telling themselves some version of the story that's a little more kid glove, a little more soft and cozy, is really, really doing yourself harm, because action and willingness to be decisive and make big sacrifices to a lot of times it's kind of like, I got to cut the limb off to save the body. Those are the kind of choices that you have to make in a turnaround. And if you say like, no, I'm not willing to take a finger, well, now it's a hand. No, I don't want to take the hand. Now it's up to the elbow. Like you hesitate and you're unwilling to make those hard choices. You look up one day and you've now jeopardized the entire thing. And so I find that, when I was young, I had the advantage of I was young. I didn't have a family. I didn't have some of the things that now in life make it a lot more challenging to make really hard, gutsy decisions that can harm me short term. And I wasn't the one who created the problem. So all of those gave me advantage to say, like, there's no one to lie to about what's happening here. This is the hard reality. But looking back, I think that's a huge part of the formula to actually make it through and be successful.
It brings up a really good point, because I may have a sort of different view on this, but I like what you're talking about in terms of transparency and being brutally open about financials. And I think coming back to financials and money, a lot of founders keep it very under wraps. Like they're afraid of judgment. They're afraid of what that's going to be interpreted as. They're afraid of showing and talking about money with their teams. So where's that line? Like where's the line between transparency and too much information?
It's a good question. I think this open book management concept became kind of in vogue 15 or 20 years ago. And I think a lot of people love elements of it. I'm not a proponent of being like wildly open, like everyone's salaries are out there publicly and that sort of thing. Um, but I think it has to do with like you have to have an educated team. You have to pair the education and the kind of awareness and information that they're given. And then the ability to do something with all of that. If
Yeah.
you're just telling people to tell them, there's no real value in that. They'll feel helpless and worried, right? Or helpless and whatever. But I think that, pairing those things together, and when we've seen, like, I don't know if you're familiar with the Great Game of Business, but they were the ones who basically created Jack Stack, and that group basically created open book management. Well, they were a massive employer in a tiny community where the success of that company was going to be the success or failure of that town.
Right.
And they had a large number of people who were shareholders. Everyone's job was on the line. No one was getting rich off of this situation. And everyone, it was either like we all pull together and we succeed, or we fail and no one even wants to think about what that's going to mean for all of us. So in that environment, being radically open makes a lot of sense. Like we don't have the time or the luxury of time to let people have their own ideas about what's going on. But there's a lot of other situations where it's just really distracting from what I've seen and found to be some entrepreneurs like overshares. I don't think that's necessarily a good thing either. Some also just kind of brainstorm and just kind of vomit whatever is going on in their brain out to the team. It's a lot for people to process. It's not always the right way for people to handle information.
It's another reason for founders to be literate in all of these numbers. And I think that there's sort of like an in between there. I think one of and I do a lot of work with teams and in team development and high growth teams and, different approaches to how we put people in roles and job architecture and all that. And I think if we know what numbers are relevant and important to a team of folks, I think it makes a lot of sense to have those as almost like little dashboard items for them
Mhm.
to work towards. And hey, let's get together. This is our project. Okay. So all the work that we do is in the service of impacting these numbers. And I don't even mean revenue numbers, but all the things that are indicative of how healthy this business is. And I also know that human nature is that the more I have ownership over and impact on the progress and the impact or the things that are being, the dog is just, the more I feel connected to my work and the more I'm going to work towards the right things. So I
Yep.
think there's something to be said for, this team is focused on these numbers and I can see in real time how they're being affected, as opposed to giving the team access to all the financials for them to interpret, because not everybody is an expert in financials or even understanding the narrative behind the numbers. So I think there's like some happy medium in there, whereas the team that is always just sitting there waiting for the leader to give them the narrative, I think that's where we run into a lot of disconnection and people just sort of following orders. And I don't know that that's a really successful and progressive organization.
Yeah. No, I love that. I always say the job of a business leader is basically to go out and understand the complexity of the world so you can bring it home and simplify it. Like that's the goal. It's not, I think when I was younger in my career and I was learning all these things and I was really excited about them and I thought everyone was a business nerd like I was. And so I'm bringing all this complexity back and I'm just shoveling it on. I'm like, check this out. And wow, what about this? And look at how all this fits together. And people were just completely overwhelmed. I think to your point, bringing it back simplifying it, and then saying, hey, for your role, you're a buyer at the company. So I want you to have some general awareness of how the company is doing. But within your role, here's the main things you should be focused on that are really going to help the company get to its goals and how that fits in our strategy. Like, that is the job of the leader, is not to just, overwhelm somebody with 100 things. And like you said, that's why we advocate for the 5-line P&L. That's why, a lot of the other things we do is convert the numbers that the business is experiencing kind of financially into the story that the employees know. So like, are we busy today? Yes or no? Well, we should have a scorecard or some sort of metrics that kind of reflect that, because everyone knows if you're busy, but we don't necessarily see how does busy today convert into success in the financials. Like, you got to help them connect those dots.
And I truly think that the people who have the answers to what levers we pull inside the business to improve those numbers are the people who are pulling the levers, right? Who are the ones on the street that are actually seeing what's happening. I've got one more question for you, and then we'll go into the speed round. But so we talked about founders typically not being, super open to wanting to have a financial education, and for some reason it's really confronting for them, et cetera, et cetera, et cetera. So oftentimes what they'll do is they'll look to trusted advisors or people like you or like me to help them kind of navigate that. But then I've seen it happen where you have like a CFO and a CPA, and they don't agree on the financial narrative of the business. So how, as a founder, do you navigate that, and do you ensure that you have enough understanding and knowledge of both sides to be able to navigate that and get to a place where everybody kind of understands?
Yeah, it's a good question. I think, everyone you have to understand the perspective. So part of, if you're a founder, I look at your job as almost like the sound mixer. If we were having like a big production, like a big play or something, your job is to control the mixing board. Like, you need to know what volume and at what time you want to hear from different people in your business. And it could be your co-founder, it could be your family members, it could be your banker, it could be your CPA, it could be your CFO, could be your exit specialist. Like, whoever those people are, they each have a voice that is significant and meaningful and have a time and a place. The unfortunate reality is you have to be the one to make that kind of judgment call. So I like to say, as a CFO, my job is to help your business make so much money that your CPA's job is really hard. Like, that's our goal. I want you to make enough profit and enough cash flow. And then the CPA's job is to make sure that within the legal bounds that you pay as little tax as you possibly can, right? They are not an expert at how you make money. They're just not. I don't care. I know a CPA can read a financial statement. I know CPAs understand what revenue is and all the different terms are, but they spend all day focused on tax. I know just enough about tax to be dangerous. I'm not going to do your return for you. That would be a terrible idea, right? And so everyone has their own kind of place. And your job is to kind of synthesize across those and make sure that you're getting good enough advice for the stage that you're at. If you're not happy with your financial performance, you need somebody who's focused on that, not focused on taxes. Those are two totally different things.
And so we talked about this just before we got on the episode, but who owns strategy?
The owner of the business, the founder and visionary owns strategy. Like,
yeah,
100%. Same.
And thing. There's financial strategy, there is business strategy, there is growth strategy, there is exit strategy, but all of those pieces need to play together. Yes. And the thing that I've heard so many times, especially if you get to like the Deloittes and the PwCs, and they have a very financially focused individual who says, oh, I come and I do the business strategy. No, you don't, right? Because there's so much nuance inside a business strategy that the financial strategy actually needs to support the business strategy, but they all need to kind of talk to each other. So, when you hear strategy, remember that it's not apples and oranges.
Yeah. And I would say in a founder-led company, it's even more significant to remember that, what is the strategy serving? So we talk about the term vision, and that's kind of a vague thing, but the idea would be that this business is serving the owners of the business in terms of like, what are we doing this for? we should have a vision for what we're trying to do in the market and who we're supporting. We should also have a vision for the lifestyle of the owner. Is this a business we're building to run, to build to exit? We're building to maximize value. What is the purpose of what we're trying to do here? Because to your point, then growth strategy and overall business strategy and team strategy and financial strategy and all the other strategies need to be in service of that ultimate goal. And until that's defined, we're all just kind of, grasping for straws.
The first exercise I do with all my new CEOs is I say, what does the business need to do for you? Mm-hmm. And they're like, what do you mean? And they start spouting off what we do for our customers. No, hold on a second. What does the business need to do for you first? And then we can talk about what the business needs to do for your customers, right?
Exactly. Yeah.
Okay. We're going to do the speed round. We'll jump in. These again are just first gut reaction. There's no right or wrong answers. And you can tell me you hate the question and we're just not going to answer it. So ready?
Fair enough.
Okay. All right. What percentage of your monthly revenue should sit untouched as a cash buffer?
Monthly revenue? Probably 100%. Of your month, 100% of your revenue for a given month should be available as reserves. Not that you should be able to save 100% every month, but yeah.
Right. Okay. Got it. Yep. A client wants net 60 terms on a deal that would double your revenue. Do you walk away?
You negotiate for a better deal. You can grow. You can absolutely grow out of business. You can kill yourself by overeating in one sitting, right?
Yeah.
Don't do it.
Profitable but cash poor. Slow down sales or take on debt?
Fix your cash model. I don't take on debt to lose cash. I'm not gonna do it. So if I have to slow down sales, you slow down sales, but better answer would be to fix your cash model.
Okay. A founder who doesn't read their own financials, ignorant or delegating?
Ignorant.
Yeah.
Sadly.
You have 1 week of runway left. Cut staff or cut marketing?
Brutal. Cut staff.
You're in a much worse position than either of those.
Honestly, you probably need to cut both, and you need to get back to kind of guerrilla marketing and go, hand-to-hand combat with trying to grow your way out of there, because you probably can't afford to spend on either. Truth be told.
Okay. Great conversation. Thank you for those answers. We have a couple of deep dive resources. Simple Numbers, Straight Talk, Big Profits by Greg Crabtree. The Pumpkin Plan by Mike Michalowicz, who was also the Profit First guy. Really good conversation today. Colin, where can our listeners learn more about you?
The easiest is just go to my website at finelevate.com, or I'm pretty active on LinkedIn. You can always find me there. But just love to keep the conversation going. I love entrepreneurs. I've only ever been an entrepreneur, but like you said, I've spent a lot of my career dealing with big enterprise level companies. And so now that I'm working exclusively with entrepreneurs, I love it.
Yeah. When I made that shift too, so much better in terms of quality of life and all of the impact that that you can make. So we're here for it as well. All right. Thank you all so much for listening. Please be sure to visit howtofounder.com, where you can connect with us on LinkedIn and subscribe to our YouTube, Apple Podcast, and Spotify channels. And remember, you are the pioneer of economic prosperity. We're so grateful for having you along the way, for listening live. Let us know what you think. Give us a review if you liked it. Don't give us a review if you didn't like it. And we'll see you again on the next episode. Thank you.